we're just awash on the sea of Trump's tariffs, uncertain of where we go next. It's annoying. I can't wait for it to be over. I'm with you. I want some certainty. I care less about what it is. I think once we have uncertainty baked into the market, the fundamentals of crypto will take back over and we will be back at all-time highs. I've actually been tremendously heartened by the strength of Bitcoin in the face of this macro uncertainty, right? Since the election, I know everyone's hyped about gold. Since the election, Bitcoin has strongly outperformed gold. It's strong. There it is. It's strongly outperformed the S&P 500. It's crushed the Qs. It's in a position to race to all-time highs and then beyond. But we have to get through this uncertainty.
The turbulence in the crypto market is gradually approaching an all-time peak for this cycle. Bitcoin dropped to a low of $77,200 on Sunday, a multi-week low for the leading cryptocurrency, which, by all indications, should be screaming higher at this point of the bull market. The recent decline in crypto asset prices can be attributed to a complex interplay of macroeconomic forces, market sentiment, and structural dynamics within the digital asset ecosystem. While short-term volatility is common in the crypto space, the current downturn reflects deeper concerns that go beyond typical market corrections. At the heart of the decline is the macroeconomic environment, particularly President Trump's latest executive order imposing a 10% universal tariff on almost all imports to the U.S. and higher rates of 11% to 50% on goods from 57 trading partners. The 10% universal tariff took effect on April 5th, while higher rates will begin on Wednesday. According to reports, at least 50 countries, including allies and trading partners like Israel, Vietnam, and Italy, have reached out to Trump to negotiate these new tariffs. Higher tariffs may mean higher prices across a wide swath of consumer goods, and with inflation already proving sticky, the Fed is unlikely to ease aggressively. As a result, U.S. Treasury yields have climbed, real rates are rising, and this is hurting demand for non-yielding speculative assets like cryptocurrencies. In a recent interview with Milk Road, Bitwise CIO Matt Hougan explains that the macro volatility stemming from Trump's tariffs and the general uncertainty about the Fed's next moves is the only thing stopping crypto asset prices from ripping higher. Despite the current market environment, Hougan, one of the world's leading experts on crypto, ETFs, and financial technology, believes this is the best time to buy Bitcoin on a risk-adjusted basis. We will bring you clips from Hougan's insightful interview alongside Ryan Rasmussen, the head of research at Bitwise Asset Management. Please like and share this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
I love this image so much. You know, I wrote that memo about the first time that I really heard about Bitcoin was when it crossed $1 in February of 2011. And I mentioned in the memo that I ran a meeting and, you know, at the end of that meeting, we had done a discussion on Bitcoin. I could have gone out and bought $1,000 of Bitcoin. I'd have $88 million today. And instead, I left the office and got a cup of coffee, which is a true story. It's a very expensive cup of coffee. But then I use this as an example because let's say I had decided to buy $1,000 of Bitcoin. The largest exchange in crypto at the time was New Liberty Standard. And this is its terms of service. You can buy Bitcoins by sending a PayPal payment to this address. I try to process it in 48 hours. This is a personal hobby. Everything on this site is legal as far as I know. So like it's easy to say today, I should have gone and bought $1,000 of Bitcoin. But at the time, it meant sending $1,000 to a random dude who said it maybe is legal what I'm doing. Like there was just so much risk. And if you think about that's been true throughout crypto's history. We had trading risk. Then we had custody risk. Where would I have custodied my crypto? Probably at Mt. Gox. Like, oh, that didn't turn out so well, right? And then we had regulatory risk. And then there was the risk of would institutions adopt it? And, you know, would we ever get an ETF? There were just so many risks in crypto all along the way that from a risk-adjusted basis, like, of course, from an absolute basis, I should have gone out and bought Bitcoin when it was $1. But adjusting for all the risk, the trading risk, the custody risk, the regulatory risk, et cetera, it was a terrible investment. That's why I didn't do it. You shouldn't feel bad if you didn't do it as well. The point I was making to get to this idea that this is the best risk-adjusted moment to buy Bitcoin is history, is we've removed all of the existential risks. The last existential risk, the one that I was still worried about as recently as 6 months ago, was that the US government would ban it. That one day the US government would feel the dollar was threatened by Bitcoin and it would ban it the way it effectively banned the private ownership of gold in the 1930s. And that was still a major risk. Like, your investment could go down a lot if that happened. But now we have a strategic Bitcoin reserve. Now it's in the US's interest to support Bitcoin. So we've removed all of the existential risks from Bitcoin. And yet we still have a 10x to go before we match gold. And I think Bitcoin will ultimately be much more than gold. So there's still 10, 20x more upside and very little of this existential risk on the downside. There's no risk that Bitcoin is going to zero. It's like an incredible setup. That's why I've been so excited to be on the road and sort of help people realize this. It's the best moment in history to buy Bitcoin. I'll say I gave a talk at the Barron's Top 100 conference a couple of weeks ago, which is the largest 100 advisors in the room in the US, right? These are the big dogs managing billions. And 4 of them told me afterwards that they bought Bitcoin during my talk. So I will say that this message read like on their phone when they should have been listening to me. I will say,
I think they were listening, actually.
Yeah, that's right. You're right.
It worked. Your sales pitch worked.
It's totally allowed to buy Bitcoin during my talk. That's fine. But I do think it resonates. I think it's a very simple framing. One of the big challenges in Bitcoin is we come with all this anchor, all this history, all this Silk Road and Mt. Gox and all these negative stories, and really reminding people this is a different asset. This is an asset that Larry Fink just wrote in his annual letter could replace the dollar. I mean, we are in a different era of Bitcoin. And I think, explaining it this way sort of wakes people up. I do think it's an effective framing that is bringing people over the line.
While Bitcoin and other cryptocurrencies have been significantly affected by President Trump's Liberation Day declarations, other assets have been hit harder by the evolving macro uncertainty. Ryan pointed that out in an April 4th tweet, which reads, "Returns since Liberation Day. Bitcoin, plus 2.2%, gold, minus 2.9%, SPY, minus 10.5%, QQQ, minus 11.2%, Magnificent 7, Microsoft, minus 5.8%, Google, minus 7.3%, Amazon, minus 12.8%, Meta, minus 13.6%, Nvidia, minus 14.6%, Tesla, minus 15.3%, Apple, minus 15.9%. Real Vision CEO Raoul also recently reacted to a social media thread about artificial general intelligence, AGI, and artificial superintelligence, ASI. His post reads, "While we are f***ing around worried about politics and tariffs, a deflationary nuclear bomb is detonating along with the biggest civilizational changing event in history." This is in line with Powell's economic singularity thesis, his big-picture framework for understanding a dramatic shift in the global economy and financial markets due to the convergence of macroeconomic policy, demographics, debt, and exponential technologies. In a more recent post, Powell seeks to assure investors that the market turbulence, like the many others before too, shall soon pass. His post reads, "The delicious smell of peak fear on Sunday/Monday and max noise on X. This too shall pass. I hope you are ready to look for spare cash under the sofa to add very, very soon. In a bull market, such opportunities are a gift." In their interview, Matt and Ryan discuss more important insights on why Bitcoin and crypto asset prices are set to soar rapidly in 2025 and beyond. Here are more clips from the discussion.
I think we're just at the beginning of seeing non-crypto industry corporations purchasing Bitcoin as a treasury asset. So GameStop just announced that they raised $1.5 billion to purchase Bitcoin. And I think what people don't understand is that's going to make them the 4th largest, as you have on the screen here, the 4th largest holder of Bitcoin among public companies. So they're automatically jumping past a ton of Bitcoin miners, a ton of other companies like Metaplanet and others who have adopted this Bitcoin standard in recent months with one purchase. Now, GameStop, of course, is a bit of a unique equity, a bit of a unique investment because it's lived in this realm of Wall Street bets and meme stocks now for a couple of years. But I think this is a broader signal of investors, or rather executives at companies, recognizing that investors will reward companies who invest in Bitcoin. We've seen it happen with MicroStrategy, which went from a relatively small technology stock to now being included in the NASDAQ 100 following its immense Bitcoin buy. So I think this is more of a signal of what's to come. And there's a really nuanced kind of accounting rule that changed the beginning of 2025, where it made it a lot less risky. Talking about the de-risking of Bitcoin, this is one of those elements that de-risks Bitcoin as an investment for corporations. And that rule essentially said that before 2025, companies that invested in Bitcoin could only recognize a change in value when they wrote down the value of Bitcoin if the price fell. They weren't able to get a benefit in their earnings if the price of Bitcoin rose. So it was a huge risk move from an earnings perspective, or from signaling to the market what's happening with the company's growth and earnings if they purchased Bitcoin. But now, at the beginning of this year, that rule changed, and now companies can get the benefit of Bitcoin appreciation on their balance sheet reflected in their earnings. And I think that's a huge thing that's going to transform the market. We had 70 plus companies buying Bitcoin before that rule change went into effect. They were buying Bitcoin when, in the best case scenario, the investment would stay flat, and in a worst case scenario, the investment would fall and they would have to take a huge hit to their earnings. That's no longer the case. And I think we're starting to see more non-crypto companies recognize the benefit they can get from investing in Bitcoin as a treasury asset. I think the US investing in Bitcoin as a strategic reserve asset certainly de-risks a corporation doing that and looking dumb or coming off to investors like they don't know what they're doing. Say, look, the US government is doing this. Some of the best investors out there, Howard Lutnick, Scott Bessent, you have David Sachs, they're looking to bring Bitcoin into the US government. Why shouldn't we be doing that as a corporation when we can get a benefit to our stock price? So I think a lot more companies are going to buy Bitcoin this year, and GameStop's more the beginning of the trend that, again, the people that are catching the falling knife here.
In related news, JP Morgan Chase now says there's a 60% chance the world could fall into a recession this year, a big jump from its earlier estimate of 40%. The bank believes the main reason is the US government's new trade policies, including tariffs on goods from China and the European Union. In a report seen by Reuters, JP Morgan said these US policies are the biggest threat to the global economy right now. The bank warned that the effects could get worse if other countries strike back with their own tariffs, if American businesses lose confidence, or if supply chains get disrupted. Still, JP Morgan thinks that interest rate cuts by the Federal Reserve might help soften the blow. Other major financial groups are also worried. HSBC, a big international bank, says its models show a 40% chance of a recession by the end of the year, based on how the stock market is acting. Goldman Sachs has also raised its US recession forecast to 35%, up from 20%. They expect inflation to stay high, around 3.5%, which is above the Fed's goal of 2%. All this shows growing concern that trade tensions and inflation could seriously slow down the economy, even as central banks look for ways to prevent a downturn. How much of a bloodbath do you think lies ahead for the crypto market in 2025? Or do you agree that these developments will be short-lived and prices will soon start soaring higher? Please share your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.